Hey everyone, Koch Investor back to our earnings video for today. So we're starting the week pretty strong with a SoFi earnings report. Now I know some of you will already comment, how come the stock was up 8% before the earnings report came out, and how come the stock right now, at the time of making this video, it's only up 2 to 3%. To be honest, I don't know, pre-market was pretty weird. Palantir was up another 4-5% or so on no news. So there is that. But looking at the business, this was a triple beat, although just a slight beat on revenue and EPS, but they did yet again raised full year guidance, and that's the most important thing. The most important thing during earnings season is not the stock's reaction. It's how the business is doing right now and how management thinks the business will be doing in the future. And like the past couple of quarters with SoFi, execution here has been top notch. So let's go over the report. First, let's start off with the highlights here. So we deliver another quarter of record financial results and generated our 9th consecutive quarter of record adjusted net revenue, which was up 37% year over year. Record revenue at the company level was driven by a record revenue in both our technology platform business segment and our financial services business segment, coupled with continued strong lending business segment revenue growth. We also generated our 4th consecutive quarter of record adjusted EBITDA of $77 million, representing a 43% incremental adjusted EBITDA margin and a 16% margin overall, as well as a 36% incremental GAAP net income margin. Now, by the way, with regards to the adjusted EBITDA, now it's the 2nd consecutive quarter that adjusted EBITDA is more than SBC's. SBC's did increase this quarter, but still less than adjusted EBITDA. Then with regards to total deposits, so that grew by $2.7 billion, up 26% during the second quarter to $12.7 billion at quarter end, and over 90% of SoFi Money deposits, inclusive of checkings and savings and cash management accounts, are from direct deposit members. They say here, from new direct deposit accounts opened in the second quarter, the median FICO score was 747. More than half of newly funded SoFi Money accounts are setting up direct deposits by day 30, and this has had a significant impact on debit spending, with continued strong cross-buy trend from this attractive member base into lending and other financial services, with our launch of offering FDIC insurance of up to $2 million. Nearly 98% of our deposits were insured at quarter end. Now, of course, last quarter we talked a lot about the technology platform. Why is it not reaccelerating? What's the issue there? So this quarter revenue was $87.6 million for the second quarter, an increase of 4% year over year and 13% sequentially, and includes strong contribution from Galileo, which had 9% sequential revenue growth, and continued strong contribution from Technisys, which had 21% sequential revenue growth. Contribution profit of $17.2 million decreased 21% year over year for a margin of 20%, which improved modestly from the prior quarter. We are seeing strong adoption of new products, including Connecta, our AI natural language customer service bot, and our payment risk platform, a platform which leverages transactional data to reduce transaction fraud. So, okay, there's still some work to do with regards to this segment, but we are seeing already a little improvement from last quarter. We still have to hear who that huge fish will be, their customer that they've been hinting about for the last 2 quarters or so. All right, let's continue here. So members. We are now over 6 million members, that increased 44% year over year. So new members total 584,000 in the second quarter. Truly tremendous growth there. And again, SoFi might be growing super fast already for the last 2 years or so, but as you can see here, yes, year over year growth declines, but you're starting from a much bigger base. As for products, they added 847,000 new products in Q2, bringing the total to 9.4 million. That's up 43% year over year. As for Galileo, like we've seen before, so total accounts are now 129 million, up 11% year over year. And as you see, last quarter we had a decrease. This quarter we're back up, and hopefully that trend continues. As for lending and financial services products, so lending up 25% year over year to 1.5 million, and financial services up 47% to 7.9 million. And with regards to the lending products, you can see that in the last 3 quarters, we grew 24%, this quarter 25%. And as you can see here, the financial services productivity loops, the trend continues. Total financial services keeps increasing, so it's now at 5.3 times the amount of lending products. And so if we compare the guidance that they gave us last quarter to the results of this quarter, you can see that adjusted net revenue, the delta there is on the low end 4% beat and on the high end 2%. As for adjusted EBITDA, 27 million to 17 million and the margin 5 to 3%. Pretty good. Then for the second half non-GAAP guidance, they expect to grow 19 to 26% year over year and adjusted EBITDA margin of 18% with adjusted EBITDA of between 180 to 190 million dollars. And here's the full year guidance. So again, a raise there. So they expect to deliver between 1.97 to 2.03 billion dollars in adjusted net revenue and between 333 and 343 million dollars in adjusted EBITDA at a 40 to 44% incremental adjusted EBITDA margin. And this guide again assumes positive quarterly GAAP net income in Q4 2023. So I'll repeat what I keep saying again and again. I won't be surprised if we get another guidance raise next quarter. It was the same story last quarter, the quarter before that, and the quarter before that. Like I said, execution is key. The stock will do what the stock will do in the short term. But so long as the business continues to execute, we'll be just fine. Now, saying that, we have some extra numbers we need to go over. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year. So thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now or go to fool.com/couchinvestor. So with regards to the lending segment, I'll try and zoom in as much as possible. So focus on fiscal year 2023, Q1, Q2. As you can see, student loan originations decreased by quite a lot. But if we look at personal loans origination, that increased by around $800 million or so. Home loans, of course, kept increasing. So that's nice to see. And so overall, the originations in the lending segment increased by around 800 million. And here we can maybe have a small explanation as to why the stock went from 8% up pre-market to now just up 2% or so, maybe even flat, depends when you're watching this video. So if you look at net income loss on a GAAP basis, you can see that for Q1, we had $34.4 million of a loss there, huge improvement from the last couple of quarters. And then we reach Q2 and you can see that it has increased there. That might be a small explanation when it comes to the pre-market action. But like I said at the start of this video, if you look at adjusted EBITDA, we have been improving quarter after quarter. If you look at share-based expense, it has been coming down as well until Q1, 64.22 million, then Q2, 75.8 million, so an increase there, but as you can see, still less than adjusted EBITDA, which is pretty important. And our last couple of things here, assets, so cash and cash equivalents of just over $3 billion there. And then we look at total loans reaching $18.56 billion. Compare that to $15.9 billion quarter over quarter and $13.6 billion year over year. So to conclude, pretty positive quarter in my opinion. Again, the stock will do what the stock will do, but I'm liking the trend here. Everything goes the right way. Yes, net income loss this quarter is a bit more than last quarter. Fine, SBCs has increased a bit as well, but overall, the trend is positive. Raised full year guidance, still expecting profitability at the end of this year. So in Q4, my opinion, that's all I needed to hear. Of course, we'll get more information during the earnings call. I'll make sure to cover that in the weekly newsletter. Link is down in the description. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.